Assalamualaikum and good morning, everyone. Assalamualaikum and good morning, everyone. Thank you for joining us in our webinar today. I'm Farus Nada, the Executive Director of Global Compact Network Malaysia, the local network of the United Nations Global Compact, which is the world's largest initiative on corporate sustainability. Please do reach out to us if you'd like to know more about us. This morning, we are privileged and excited to be able to welcome ASG Elliott Harris to share his wisdom and insights on an interesting topic. And to moderate this session, we also have a dear friend, Nadiah Hanim, who wears many hats, including having her own current affairs shows on Bernama TV. So without further ado, Nadiah, over to you.
Hi, Assalamualaikum. Good morning, everyone. I hope everyone is well and safe at home while we have this exciting session today. I know it's a little different from the usual webinars that we usually have. We're having an early bird session this morning. So thank you very much for all of those who have taken the time to join us this morning. So of course, on behalf of the UN Global Compact Malaysia, we want to welcome you to the session today, and you are with us for a session on investing in sustainability, competitive advantage for crisis recovery. Now today we've got with us Mr. Elliott Harris, who is actually the UN Assistant Secretary General for Economic Development, and he's also the Chief Economist of the UN. Now Harris, Elliott actually hails from Trinidad and Tobago, but today he's spending time with us and all of the other friends of ours in Malaysia who are going to be listening to you, and hopefully you'll be able to share with us some pearls of wisdom. So a bit of a background on Elliott. He has over 25 years of experience in international economic development. Now this ranges from policy analysis to, of course, the knowledge of the UN system, multilateral and interagency coordination process. And he's also had extensive experience in macroeconomic policies and, of course, its application in for example, the central system for the reduction of poverty and ways in which to create a resilient and sustained economy, which is exactly the state that we're trying to achieve right now. So very quickly, I'd like to share how the session's proceedings are going to be. Elliott's going to be giving his presentation. Now, everyone's mic is already on mute, but you do have a little button that allows you to ask a question. And of course, as usual, put in whatever comments that you have on the chat box. And we will have, hopefully, a very lively Q&A session after he's done. So without further ado, Elliott.
Thank you very much, Nadiah. Good morning to everyone in Malaysia and elsewhere. Thank you very much for taking the time to join us for this webinar. And I think we're talking about what is probably the single most important issue facing us all on the globe today. What is it that I could say about the crisis per se that you haven't already heard? Now, I think that is an important question to ask, because I don't want to spend a lot of time regurgitating things that you've heard, analyses that you've already been party to. But I'd like to make a couple of points first to sort of set the stage for what I want to say in the main part of my remarks this morning, which is about the response that we're taking as an emergency response to first the health crisis, then also to the economic and financial crisis that has ensued, but also with a view to what we want to see come about when we're in the recovery phase. Because one of the things that we in the UN in particular want to achieve is a better recovery. We want to build back better than what we had before. So I think that's a key point, and I'll start off simply by saying that this COVID-19, this pandemic, is first and foremost a human crisis, of course. And the direct impact on health and on human well-being of this contagious virus and the infections that are spreading at lightning speed across borders, it is, in fact, putting growing demands on healthcare systems, and the rising death tolls as well are causing trouble for even the richest and the most advanced societies on the face of the planet. And so, consequently, we are facing an emergency first and foremost in health, and what we do to deal with that emergency conditions everything else that happens afterwards. Now, this is an important point, because what we see happening here is that the emergency on the health side and the public response to it, and most importantly, the restrictions on movement and the containment measures themselves are having this dramatic impact on the economic activities, leading to a contraction of demand, significant job losses. this health crisis has evolved with uncanny speed into a global economic and financial crisis in an unprecedented way that has never before happened in our recorded history. What we see happening here is that the spread of the virus has disrupted global supply chains and international trade. Global manufacturing has contracted significantly because of the disruption to these supply chains, because many firms are not able to get to the intermediate inputs that they would need. We have nearly 100 countries closing their national borders to travel and to trade, and movement of people and tourism has come to a screeching halt with significant impacts on many economies everywhere. We also have a situation where, while the containment measures are necessary, they have also, including the enforced social distancing, keeping people away from crowded places and asking them to stay at home, this has led to an unprecedented shock in demand. I mean, we've never seen anything quite like that in peacetime. And it hit first the services sector, where the activity actually requires the interaction of people in restaurants or in entertainment venues or in travel. And these sectors, bear in mind, account for almost a quarter of jobs in those economies that were first affected by the crisis. And that impact, therefore, has spread very rapidly into all sectors of the economy and into all corners of the world. And as a result of that, millions of people have lost either income and or jobs. At the same time, in more than 100 countries all around the world, it is in fact a global economic, real economic shock, the likes of which we've never seen. Because let's not forget the global financial crisis 10 years ago, 12 years ago, was a financial crisis. It wasn't a crisis of the real economy. Now, these adverse effects that we've seen in the countries that were first affected by the crisis, and the prolonged restriction on economic activity, that's causing things to spill over into developing countries via the trade and investment channels. And in fact, many of the developing countries are harder hit at this stage by the economic downturn than they have been hit by the health crisis per se. That's the reverse of what's been going on in the Asian economies and in the bigger Asian economies and in Europe and in North America. Now, these shocks to the real economy at the same time, they've led to three major developments on global financial markets. I'm sure you're all very aware of them. The extreme volatility of global financial markets. We have had, secondly, large-scale capital outflows and pressure growing on many of the developing countries' foreign exchanges and on their reserves. In fact, we've seen over $90 billion of outflow of private capital from emerging markets, much more than we had at the worst part of the global financial crisis 12 years ago. And the third thing that we've seen is a substantial increase in the risk of debt distress in both public and private debt. And this was a problem that existed before the crisis began, but has been deeply exacerbated by the crisis itself. And these financial impacts now are having spillover and feedback effects into the real economy, and they are increasing the depth of the recession and likely also its duration. So what has been the response? In sort of brief terms, what we see happening is that at the national level, we've had fiscal and monetary policies deployed that aim to expand spending on public health issues. There are paid sick leave provisions that are being made, wage subsidies and transfers. We have many financial institutions granting stays in the payment of loans and other assistance being extended to struggling households and to corporates and to small businesses. And we have monetary authorities injecting lots of liquidity into struggling markets in an effort to stabilize them. We have developing countries experiencing large and sudden capital outflows, as I mentioned, and they will, of course, need to deploy all the tools that they have in their toolkits, including capital flow management policies, to manage this major upheaval, which is causing quite a lot of instability in their economies. But the key point here is that in many cases, the scope for action, the scope for fiscal measures or for monetary measures, may be constrained by what is a situation of low fiscal space, in part due to the debt, but also because in many cases over the last few years, many countries have not been able to rebuild the fiscal buffers that were expended in the global financial crisis 12 years ago. And because of a long period of very, very low interest rates, the ability of central banks to intervene very proactively with the traditional tools of monetary policy, that scope is also very limited. In more specific terms, what we've seen happening is that many countries in both the developed and the developing world have announced or put in place fiscal stimulus packages in support of the monetary policies that have already been put in place. Now, most of these plans contain at least two basic elements: measures to support businesses, as well as measures to protect individuals and households, focusing in particular on those that are more vulnerable or otherwise disadvantaged. Now, the support to businesses include things like helping them to secure employment and wages by providing income support to workers who would otherwise be temporarily laid off, or those whose working hours have been reduced. On the side of protecting people, we have many of these stimulus plans offering income support, direct income support to workers, and especially to workers who become sick and to their families. Some have made provisions for extending paid sick leave or providing it to workers who are self-employed. And in some cases, for people who can't work from home, while their children are being kept away from school because of the containment measures, the help is being provided to be care to the children. And then there is easing of access to things like targeted cash benefits, or in some cases even thought has been given to some sort of a universal income transfer. In addition, many countries are extending unemployment benefits to workers who are not covered formally. They're easing the access to these benefits, and they're trying to help ensure that families can stay in their homes by making sure or preventing evictions in the case of non-payment of rent, for example. And on the monetary and financial front, we see three types of measures, or two basic types of measures. Measures to ensure that we have adequate liquidity and resources, and these would be things that aim to strengthen the global safety net, financial safety net. So there's emergency funding being provided. There has been a lot of talk around a sizable issue of new special drawing rights by the IMF to buttress global liquidity. There has been an increase in central bank bilateral swap lines and an extension of these lines into other bilateral lines as well. And then there has been a lot of discussion and, in fact, some decisions taken with a view to preventing a debt crisis from exploding, because many understand that with countries being as vulnerable as they are, as indebted as they are, a debt crisis that happens in one country could very easily become contagious and spread across the world rapidly. Now, all are saying that we need to think beyond the immediate response measures to the recovery phase, and that this recovery should aim to create a more resilient future so that we are better able to manage future shocks, even if these shocks are from different sources, than we are today. Now, one aspect of that is to invest in public services and goods, including in preparedness for economic and non-economic shocks of the kind that we're experiencing now. And those measures, the idea is one would look forward to a system where social protection is strengthened. The social protection systems are in place, and they can kick in automatically when the need arises. There's also a lot of emphasis and attention being paid to stepping up longer-term investments in resilient infrastructure for sustainable development. Things like public investment in public transportation systems, or in sustainable housing, or energy-efficient housing, other buildings, or in renewable energy systems. There needs to be, and all agree more or less, that there should be increasing investment in risk management and risk preparedness as part of the building up of resilience and the ability of people and societies to deal with, to absorb shocks that come from outside unexpectedly. On the financial side, there is a sense that, well, there needs to be a strengthening of regulatory frameworks to discourage the kind of over-leveraging and build-up of debt that we've experienced in these last few years of very low interest rates. And above all, to put in place measures that discourage the accumulation of debt that is then not used for productive purposes. And then finally, there is a sense that the international financial safety net needs to be strengthened so that in case we have another major global shock of this kind, we are confident that we can deal with it, and that we need to have in place a framework for debt sustainability so that the threat of debt distress does not imperil the entire system. Now, there are a couple of other things that we have to consider in this context as well. One is that this is a global crisis. It affects us all, but it doesn't affect us all the same way. And we in the UN are particularly attuned to the fact that there are groups that are at a particular disadvantage in this crisis, groups of countries and groups of people. So, for example, I'm sitting at home, I have access to the internet, I have a computer that I'm using here to talk to you over in Malaysia, but it allows, I can work at home, and I'm a salaried employee, so my salary continues to flow. If I were a waiter in a restaurant, I would have no income at all. And that is immediately a huge difference in the way in which we are both, myself and this waiter, affected by this crisis. And this is something that we really hope that the stimulus measures and the support packages take into account when they look at who's at risk and how can they best be supported. The same thing applies to countries. There are some countries that are particularly dependent on services. For example, some of the tourist destinations. In the Caribbean, right near to where we live in our time zone, are many economies for whom tourism represents between 20 and 40% of gross domestic product, and supplies the impetus for maybe as much as half, if not more, 3/4 of all employment in the economy. And these are countries that are very dependent on tourists coming from North America. And so the fact of a major downturn, a major recession in the North American market immediately leads to a much deeper downturn in these particularly dependent economies. In addition to which, we know that whereas many of the countries that were first affected have been able to step out and make these major, very generous fiscal stimulus packages, not every country has the fiscal space to do so. And in particular, they may not have the resources available to strengthen their public health systems so that they can deal with the public health crisis first. Because unless we get the infections under control, we won't be able to move into the economic recovery phase. We won't be able to step down the various containment measures that we put in place. And so because this is a global crisis, a global health crisis first and foremost, and because it is so infectious, this virus, and because the system is as strong as its weakest link, there is a particular global interest in ensuring that everyone is able to face up to first the health crisis and then also to the economic crisis to some extent. And so there have been calls, including in particular from the Secretary General, that the major economies and all countries should come together to launch a global coordinated support program that will help those countries least able to help themselves to weather the initial storm and to begin the recovery after we get past the health crisis. And the Secretary General in particular has called for a package, a global coordinated stimulus package that should be equivalent to at least 10% of global GDP and will include a significant easing of access for developing countries to financing on concessional or otherwise favorable terms. We have now in front of us a crisis the likes of which we've never seen before. It's a truly global phenomenon. It's spread very rapidly, and it demonstrates without any doubt how interconnected our world has become. And it's spread so rapidly because of trade, because of travel, because of the fact that we are one global village in many respects. It also underscores, more than perhaps even the climate crisis has done, that the modern world faces challenges that no one country or no one society can hope to fix on its own. And we also see very clearly that if something happens in one place, it's likely to have an impact elsewhere. And that failure to respond rapidly and in a coordinated fashion to a problem like this crisis means that if we don't contain an outbreak in one location, we are all at risk. Now, I've said the response is immediate. We have to contain the health problem, and we have to deal with the impact, the immediate impact of the economic and financial crisis that it has caused. But we know that we should also be looking ahead to what it will look like, what our world will look like after the crisis. And we should ask ourselves, I think, a couple of questions. This crisis has revealed how interconnected we are. It's demonstrated, for example, the importance of global value chains. And those value chains are what transmitted the economic crisis in the first instance. It was the interruption of production in China and the impact that had on global value chains that affected factories producing in Malaysia, long before the first infection was registered in Malaysia. And this is a really important thing. We've become accustomed to travel and to trade, and yet the restrictions that we've had to put in place demonstrate the vulnerability that kind of interconnectedness also puts forward. But what does that mean for afterwards? Does that mean that we want a system that is less interconnected and therefore less susceptible to this kind of global downturn? Does it mean that we want a multilateral trading system that perhaps is not as integrated through global value chains as the one that we have now is? Do we want to change the way in which we produce and exchange with each other so that we have perhaps something that's less susceptible to upheaval or to disruption? And these are questions I think we have to keep in the back of our mind when we also address some of the questions about how we deal with the resilience of our economies, what sorts of provisions we have to put in place, and I've mentioned some of them earlier, I'll come back to them again later, and when we think about the social outcomes. And this is an important point, because, as I said earlier, not everybody is equally affected by this crisis, and the ones who are affected the most are the ones who are most vulnerable and least well equipped to ride out the wave. They are the ones who have occupations that require them to be in physical contact with people. They're the ones who don't earn a salary, who can't work from home, and they're the ones perhaps who have no opportunities for dealing with a sick family member, or who can't otherwise rely on savings to tide them over. At the same time, we know that whereas the impact has been immediate and intense, we need to prevent these downturns from becoming permanent damage to the structure of the economy. We want, in other words, even if a business has ceased operation, we want to prevent it from going bankrupt so that it is still there to contribute to the recovery when we remove the restrictions. We don't want people to be fired and entirely unemployed, because then they have to spend a time trying to find new employment when the recovery is underway. But one problem is, in the context that we're operating in, first, is that in the rush to put in place the emergency measures to deal with the immediate crisis, we seem to have lost sight of some of the other things that are more important, or equally important, or will be more important going forward, things like social justice, or the fact that we have a major problem of inequality that has been very starkly revealed through this crisis, and the fact that so many people are being so badly affected while other people are much less affected illustrates some of the things that we have to do. We know that some countries that are more dependent on commodity exports, like petroleum products or like grains, and some that are very dependent on tourism or financial services are going to be very deeply affected. They will suffer fiscal losses that constrain their ability to contribute to invest in the recovery when the time comes. And the other thing that we want to ask ourselves is, well, why would we expect a recovery that is going to generate anything better than the situation we had at the beginning? Now, I have to expect that kind of better recovery. I work for the UN. We're supposed to be optimistic, but I also am sort of optimistic by virtue of what I've seen happening over the last few years. It is the fact that sustainability now has moved out of being something that sounds nice, something that we talk about in UN meetings, and has become increasingly something that hard-nosed businessmen and financiers and investors are looking at as good for business, as well as being good business. And I'll explain what I mean. And what I'm trying to say here is that we have in place already the building blocks that would allow us to craft a recovery that generates something that is better than what we had before. 10 years ago, if you had talked to anybody about ESG factors, environmental, social, and governance factors, 1 in 100 people might have known what you were talking about. It was the more enlightened companies 10 years ago that took on the issue of corporate social responsibility. It was good for your reputation, for your standing in the community, but it was something that was very separate from the business model of the company. Now, those of you who represent the Global Compact, the Malaysia network, you realize that that has changed. And the many thousands of companies that are signatory to the principles of responsible investment, they recognize this as well. This has now become a part of the way in which decisions are made by businesses. It's worth pointing out at the same time that the Global Compact is indeed about exactly that. It is about conducting business in a way that is more sustainable. And the principles of responsible investment, the Global Compact, they have been joined by the principles of sustainable insurance, and that all of these various principles and organizations and the way in which market players have organized themselves and think about things, all of that happened before we had the Paris Agreement on climate change, before we had the Sustainable Development Agenda and the Sustainable Development Goals. So what we see increasingly is that corporate entities look on ESG-inspired management as inherently good business practice. It's not because it sounds good or it gives you a good reputation, but because it means that you run your businesses in a much more effective way. And that means it's becoming not something that's no longer just an add-on, something you do after you've done your regular business, but it is the way in which you do the business. And it's become much more widespread. In fact, it's actually, I think, got to the point where it's slowly but surely becoming mainstream. The financial community itself is also recognizing that issues like climate change are material to their business. They understand it affects the performance of the enterprises and the companies that they invest in, that this is an additional factor of risk. And they want to understand the nature and the extent of that risk in order to manage it. And that's why the Task Force on Climate-Related Financial Disclosure has been such a force, because it has recognized the materiality of climate change, the materiality of environmental change, or environmental degradation more generally, and pointed out to people who didn't understand that before that this actually is important to business, important to finance. And so we see this taking root in the way business people and financial people think about their business, and there's an awful lot that has started to happen. Now, last September at the General Assembly in New York, we had the international banking community launching the Principles of Responsible Banking. I had the honor of being a part of the core group that actually designed those principles, and there were 24 bankers and me. That's how much it was. But when those principles were launched a year later in New York, there were 147 of the largest banks in the world, including the top 10 banks, representing I think it was $4.7 trillion of assets. And we've had a lot of other things going on. There's a net 1.5 degree business initiative, which brings together 83 of the largest Global Compact members who have committed themselves to bringing their business and their supply chains down to 1.2 levels that are consistent with 1.5 degrees of global warming by 2050. And there is also the Net Zero Asset Owners Alliance and the Global Investors for Sustainable Insurance, Sustainable Investment. More and more, the private sector is taking on this agenda. And so I think that what we need now more than anything else is not to convince the private sector that this is good, but to convince governments to put their policies where their mouths are. Governments have been lagging. They have not put in place consistently the policies that would be consistent with the commitments that they made under the Paris Agreement and under the Sustainable Development Agenda back in 2015. And so when now we start to look at what this means for business and how business should think about the recovery, I think we have an opportunity here to position ourselves as private entities, but also as members of a community, to do things in a way that is much more sustainable going forward as part of our recovery. And I'll give you an example, a very concrete example, which I hope will demonstrate what I mean. Right now, we have a situation in the global markets for oil that is unprecedented. We have oil prices that are lower than they have been for decades. And at the same time, we have demand that is very low and falling further because overall economic activity is so low down, so far down. Yeah. Now, to my mind, that is the most wonderful circumstance that any fiscal economist could hope for, because you have a global objective of reducing greenhouse gas emissions, and you have a fossil fuel industry where the prices are very low and the demand is very low. It's a perfect opportunity to reduce the subsidies to that industry because prices are low, costs are low, they need the subsidies a whole lot less. And it's a perfect time to introduce taxation of the petroleum products because prices are low, demand is low, people are not out there consuming petroleum as much as they did before. And so consequently, this is the right time to put it in place. When now, as the economies recover, the prices start to rise again, it means that the relative price between fossil fuel energy and clean renewable energy will be tilted in favor of the clean and renewable energy. That is good government policy. That is policy for sustainability, renewable energy going forward. That is SDG 7 on renewable, sustainable and clean energy. But it also has the advantage of being a measure that in the immediate term generates tax revenue and reduces subsidy expenditures and creates fiscal space that a government can use to finance the immediate measures that will protect people from unemployment, provide loan guarantees to small businesses so they don't go under because of the loss of demand, help to fund the public health systems to treat the fellow citizens who get sick from the virus, and to do what needs to be done to position the economy to recover more rapidly when the time comes. I think those are the sorts of policy choices that we have to keep in mind. There are many things that are being done right now because of urgency, but if we keep in mind where we want to end up and that we want to have a new economy that is much more resilient, a new economy that protects its citizens from shocks, a new economy that doesn't allow economic shocks or financial shocks to lead to systemic failure because we have safety nets in place, those are the types of decisions that we have to take now so that the path of our recovery leads towards greater sustainability. And I think that there are a lot of people in governments around the world who've realized that a major part of that recovery has to be through public investment, and that therefore one has an opportunity of directing those public investment flows towards things, sustainable public investments, that contribute to greater sustainability in the future. So things like renewable energy systems in new and rapidly growing urban centers, or housing that allows for reducing the amount of travel that people have to do in the urban centers and relieve some of the congestion, which by itself also contributes to relieving some of the pollution that arises in urban centers. Food distribution systems, for example, that help to reduce the amount of waste that is generated by getting food from the farm to the table. We know that we have the possibility of doing these investments in somewhat different ways. These investments are not noticeably more expensive than the old traditional style of investments, and they also send a signal to the private partners of government and to the citizens themselves that there is a change afoot, that what we have committed to as governments and as people under the Sustainable Development Agenda, under the Paris Agreement for Climate Change, that we are now starting to put in place the policies that are consistent with that. And that signal alone of a predictable and consistent direction of policy in support of sustainability will be a huge support to private sector investments that are looking to help in this economic recovery going forward. And that means then that those companies that do this, those companies that are already inspired by the principles of environmental, social, and governance factors as they run their businesses, those companies that invest in more sustainable production, in more renewable energy that is used in their production processes, that take care of their workers and provide them with incentives to keep improving their own human capital, and that provide also for a situation in society that is conducive to greater sustainability, those are the businesses that will benefit the most when the economic recovery, the sustainable economic recovery takes root, because they will be the market leaders. They will be the ones out in front of the curve. And I do think that that is something that every business leader needs to take into account and realize that this crisis, as terrible as it has been, is also a tremendous opportunity to do things better for a more sustainable and equitable future going forward. And with that, I think I'll stop. I hope I haven't bored you to tears, but I'll be very happy to answer any questions or to engage in the discussion as we go forward. Thank you.
Thank you so much, Elliott, for that amazing overview of all the different things that are happening. I hear you. As what you mentioned earlier when you're talking about the shock cycle, a lot of countries and businesses and economies very often fall short of always looking at what do we do in the immediacy of things? What do we do now? But by and large, and just a few days ago when we had the other UNGC discussion for companies in Malaysia, we were talking about BCP planning and how do you forecast not only a situation of preparing for any kind of calamities and disaster, but more importantly, next, how do you learn from the current situations to then prepare yourself better for the future. So like you talked about recovery, you're talking about rehabilitation, you're talking about closing that loop and going back to a situation and hopefully a state where everyone's a little bit more savvy. If there is another, God forbid, unprecedented catastrophe of any kind, perhaps we will be a little bit more aware. And I believe that there was also a write-up from Bain & Co., which Feroz and I were talking about yesterday. It's almost as though the COVID-19 pandemic gave the world somewhat of a dress rehearsal of what to expect and how to behave. And if this is going to be a new norm for us, whether or not mankind is going to shift the way we behave and the way we do business or go back to our old ways, of course, remains to be seen. But it does also show us that many things that we've been dragging our feet on for many, many years are actually very doable when it comes to push comes to shove.
Indeed.
So I wanted to pick on some questions that have been shared with us on the Q&A poll. There's some really amazing questions here. So I'm just gonna go by some of the popular questions that have been voted. Okay, so I'm going to start with the first question from Suksiri. Thank you, Suksiri, from UNIDO. And her question is, would you think policy measures that encourage FDI and trade openness that are practiced by most Southeast Asian countries are going to be more volatile? And hence, as a result of the COVID-19 crisis, policy measures to build back more resilient economy could actually be encouraged and should instead encourage domestic investments, looking more inside and creating growth from the inside, so to speak, rather than heavy reliance on FDI. Would you have any thought on this? Because in terms of too much resilience of the FDI, wouldn't we not put ourselves in a position of future vulnerability for external shocks? So could you share some thoughts?
That is a very fundamental question, one that's plagued development economists for quite some time. The simple fact of it is that domestic economies in developing countries, for the most part, have certain constraints on the amount of financial surplus they can mobilize. And the whole point behind either borrowing resources abroad or inviting in foreign direct investment is to increase the pool of resources available for immediate investment that could set the stage for more sustained and perhaps even higher rates of growth going forward. So that is a bit of a trade-off. Indeed, if you are open to flows of finance that are coming in from outside, foreign direct investment are perhaps more reliable flows than portfolio investment, certainly, but nonetheless, one is always vulnerable to any change in sentiment among the investors. If for some reason the situation, perhaps you have a neighbor where there's a conflict going on, that might then alter the perception of the overall risk in your area, in your region, and might dissuade some investors from investing directly in your economy. That is definitely a vulnerability. But that has to be weighed off against the possibility of a deeper, broader development effort because one has access to a larger amount of resources for investment. I think one can do certain things to reduce the risk of that change in perception. And in many respects, risk is a matter of perception. It's what the investor thinks the risk is rather than what the risk actually is. And my view is that some things can help. One can have predictable and reliable policy making and open and transparent debates around what government policy is going to be. And that sometimes helps to assuage the perception of risk. One also has to, I think, make sure that one has investment programs, investment plans that make sense, that are consistent with declared government policy and that nonetheless are bankable, investable projects into which resources can be invested. But indeed, it is always going to be a question of, are you safer behind a wall? And the answer, I think, is to a certain extent, yes, but at a tremendous cost. So I'll leave it there. I think it's a question that each country and each particular investor has to answer for themselves, but it's a trade-off.
And I think also, like you said earlier on, if you're looking at the fact that everyone on this planet is currently affected by the pandemic, but all of us are affected in different ways, I would gather that some of these policies and strategies would be relevant for certain countries, but not so for others that are perhaps even more vulnerable and even more in need of, foreign direct investments and injections that are coming in from the outside. I know that a few years ago we were talking about what is the tipping point, where for the longest time when we're talking about growth and prosperity in that element of people, planet prosperity or people, planet profit. I prefer to call it prosperity rather than profit. Very often what we hear is that growth means more spending and bigger and more resources and more consumption, whereas the planet has only got so much that it can contain. Well, the planet will adapt, but we're probably not going to be part of the narrative for long. But when we start discussing about how can economies and businesses thrive within the context of whatever that is available, I suppose then that question of how are we going to sustain, looking also at domestic spending and not just reliance on foreign direct investment would be something that comes into play. So thank you for that. We have another question now related on encouraging governments, because you had mentioned now if you look at the current pandemic, it has totally redefined the way businesses and governments and other stakeholders behave with each other. We are now learning a new lingo. We're learning how to tango with each other in a different way. So Mark Allen has this question. Are there views on how best to encourage governments, especially perhaps those that are not necessarily on the bandwagon already, and others, to use ESG principles when considering future economic stimulus, especially during this recovery? How do we nudge them in the direction that we want?
I think there are possibilities. I was having a conversation a couple of weeks ago with a gentleman who used to be a governor of one of the world's largest central banks. Now, many central banks have immediately launched programs, for example, to purchase assets as part of the liquidity support that they're giving. They're purchasing corporate paper, and they're doing it as a way of injecting liquidity into the financial markets. This is what they have to do as an emergency measure. But these are programs that have a certain duration, So we expect these programs of asset purchases to be in place even after things have stabilized in financial markets. And that leads to the possibility that perhaps central banks can start saying, well, okay, we will purchase assets from companies, yes, but those companies that are managed according to ESG principles, those companies that have managed to reduce or improve their environmental footprint, those companies that have reduced their carbon emissions, those companies will have preferential treatment. Now, had you talked to me about that 5 years ago, I would have been horrified. Long years, the IMF say, you leave the central bank to manage the stability of the value of money and create conditions for employment. All that other stuff is for finance ministers and development ministers. But I mean, the central banks are the largest players in financial markets, and finance makes the world go around. Now, to the extent that finance is interested in a more sustainable approach, in more sustainably managed firms are going to manage themselves more sustainably. It's just as simple as that. And so when we see, for example, companies that are disclosing what they're doing to improve their environmental footprint, disclosing how they integrate ESG factors into their business management, and that they do that at great cost to themselves, they are doing it because they understand that this is what investors want to know. Right? And it is a simple fact that on every stock exchange in the world, every single one, companies that disclose do just as well in terms of share price performance as companies that don't. The more you speak to investors, the more you understand that they find that really useful, because they then understand what the prospects are for the companies into which they put their money. And this is something where governments, and in particular financial regulators and central banks, can play a role. They can expressly favor those enterprises that are doing the right thing as far as sustainability is concerned. Those enterprises that are managing themselves well, that are reducing their carbon footprints, reducing their environmental impact, lowering the amount of waste that they produce, moving towards the circular economy. All of those are things that governments can foster through tax policies, differentiated depreciation schedules, that central banks can favor through differentiated asset purchase programs, and so on and so forth. And I think the time has come for those in these positions, in central banks, in finance ministries, to start thinking, what can we actually do to give these things a nudge in the right direction?
So thank you for that. I'm going to be taking a question from Jasmine Begum, but with your permission, I'm going to tweak that a little bit, Jasmine. So moving on from what you earlier talked about and how governments can actually take that leadership role, not only in terms of providing those structures and policies in place. We hear you, for example, just to share some information, the ESG factors when making investment decisions most probably poised to grow. If we're looking at the 2019 numbers, we're talking about an inflow of approximately US 21.4 billion. That's approximately 93.61 Malaysian ringgit. And this was in comparison to 5.4 billion the year before. So, you know, talking about ESG investing, especially for larger companies, is definitely set to grow. Now, understanding that a lot of the large multinationals that we have in the world have got, you know, profit margins or revenues that are larger than GDPs of certain countries, do you think multilaterals should then play a greater role in providing that common baseline for some of the policies that the world needs to move towards?
Again, I think the baseline of policies is well established. It's that blueprint that we call the Sustainable Development Agenda. And again, this is well established. This is nothing new, and all of the countries of the world signed off on it back in 2015. I think the big issue right now is that some of the policies that need to be put in place are politically a little bit difficult sometimes, and countries are led by leaders who have to keep an eye on electoral cycles, and I mean, we can't expect anything else. This is where I think we have to adapt the narrative a little bit. There was a time maybe 10 years ago where we thought that anything that would protect the environment would come at the cost of good economic performance. It would cost jobs. Well, we know full well now that is no longer the case.
Yeah.
And that is where the narrative has to change. What we have to think about here are that these measures that have to be put in place, these decisions that have to be taken, are all investments in our sustainable future. We may have, in any investment, a period where you have outflows of resources, you have to spend money to be able to realize the benefit of that investment over time. That's the same thing with policy. You have to take the policy plunge now, even if it might look a little difficult and a little bit perhaps even dangerous from an electoral perspective. But we have to put in place the policies that will shift the curve, that will lead to the type of transformation that we're looking for. Now, from that perspective, I do think that there's an awful lot that governments have to do now to step up and to demonstrate in a predictable and believable fashion that this is the direction that they want their country to go in. And given that we all are supposedly pulling on the same string in the same direction, all of us have signed on for the Sustainable Development Goals, no country should expect to be at some sort of a disadvantage relative to other countries if we're all moving in the same direction. You know? Now, some countries are farther ahead than others, that is clear. And it will be necessary for some countries to get some support. And we can all learn from each other's experience, and we can all support each other, perhaps through a sense of how did we in one country overcome some of the difficulties that another country is facing. That might help. We can also provide support in financial terms to countries that don't have the kind of resources that might allow them to move ahead more rapidly. And I think the more we realize that as we progress as a global community, and all of us make progress, all of us benefit that much more. You know, it's hard to quantify, but it does mean that if we're all working to move towards renewable energy, then we're all reducing the greenhouse gas emissions that cause the climate change that affect us all. And it's utterly irrelevant who made the most global emissions back when. The fact is we can all contribute to removing them now. Let's do it. And that is the kind of political narrative that we need to have, I think, to encourage the individuals and the businesses that are already thinking about the way they behave in a different manner. Yeah.
I'm glad you mentioned that, because that segues very nicely to the next question, which I am going to be merging Kensia and Razif's question together. What we usually see is that sustainability is a nice to have when things are good, but when it's a crisis situation, or in fact, even when it's a crisis recovery situation, at least as far as Malaysia is concerned, the larger companies, of course, have a very different outlook of what sustainability is and where it's placed in the organization as compared to maybe SMEs and micro enterprises. And more often than not, we find that in at least the survey that was conducted by the UNGC, that sustainability was not necessarily seen as a business critical function in times of crisis, although there is a steady change in this mindset, especially among corporate leaders. But in the situation that we're in, where very often we're talking about the loss of lives, we're talking about the loss of jobs, we're talking about whole structures and systems, man-made systems crumbling. When we are pushed to a situation where we have to focus on perhaps survival and health issues versus maybe economic sustainability, is there a trade-off? Is there a choice? Because more often than not, we've been looking at governments looking at that really difficult and precarious decision of, do we, for example, give more focus on health and humanity, or do we look at economic stability, understanding that the longer we prolong a lockdown period, the greater the impact would be on economic stability? And of course, America is a case in point of what's happening right now.
Well, I think that I would not ever think about sustainability in terms of economic sustainability, because again, that sort of tries to separate out what is essentially an integrated thing. It can only be sustainable if it is positive in the economic, in the social, and in the environmental sense, all at the same time. Okay, so when we look at this particular crisis and we say, okay, well, we have to concentrate on the health. Yes, indeed. Let us not forget that that health crisis affects the social directly and immediately. But that health crisis, as it has been very well demonstrated here, also has an immediate and direct impact on economic performance. Right? And that then has a feedback loop onto further social outcomes and so on and so forth. Right? Now, I've seen that people said to say we can only focus on the health and we can't look at the economic sustainability part, but that may not be true, and I don't think it is. Because when you think about it, what we're trying to do is to preserve an effort to deal with the health crisis, and we can't preserve that effort if the entire economy goes to hell. We know we can't. And that is why the stimulus messages there, stimulus packages are aimed at preventing the economic downturn from destroying the very fabric of our societies. That's why people are putting resources into supporting businesses so they don't go bankrupt, providing income to workers who've lost their income or who've lost their job so that they can at least maintain some level of consumption. And the idea here is you don't want the economy to devolve to the point where, out of pure desperation, people can no longer do what needs to be done to get the health crisis under control. If somebody can't eat and has no money and has no help, they're going to go out and try to find some way to earn some money so they can buy food to put on the table for their children. It's as basic as that. And so having a system in place that provides that support, that reduces some of that desperation, it allows people to absorb the shock and still survive while doing what needs to be done, those are measures that actually come together as a coherent whole, you see? And that means then that we are, in fact, adjusting to the health crisis and at the same time reacting to the economic and social crisis in a way that allows us to preserve some of the gains that we've had in the past, and that hopefully will be a part of the way in which we construct our future. Now, I want to stress that particular point. If you have in place a robust social protection system, then that kicks in the moment you have a crisis. Governments don't have to scramble around to find the resources to pay out for income transfers because the system, financed in part by contributions from the future beneficiaries, the system is there, the system kicks in. And this is something we saw very, very clearly in the last big crisis, that the countries that were least deeply affected by the financial crisis in 2008 and that most rapidly recovered from the crisis were the ones with the most robust social protection systems already in place, without exception, everywhere. Right? And that just shows that the social protection system is a part of the resilience structure that you need to have. Now, there, I think, is where we can see how the response to the crisis on the health side is at the same time, or should at the same time, be a response to a crisis on the economic side. And that's what corporates should take into account. Because I personally think that an enterprise that is moving towards greater ESG guidance or principles in its management will probably find that the things that it does to enhance its own sustainability or the sustainability of its production practices and its overall operations, that very few of those things are going to put it in a worse position if a crisis should hit. Yeah. In many respects, when you think about sustainability, it would imply improving, for example, the way you use your raw materials to produce. You want to use as little of that as you can, right? Over time, you make investments in changing your production modalities, but over time, that reduces the bottom line. It also reduces your dependency on raw materials, so that if there is some shock to the supply, you'll be hit a little bit less. Yeah. Now, that might be something that you say, oh, well, we can't continue to spend the effort or the money to reduce our vulnerability or to reduce our dependency on raw materials. But that's thinking only in the very, very short term. But when you look back at the recovery, the slightly longer period, which every rational businessman should be doing, you'll see that for the most part, it'll be hard to find an argument against sustainability when you look past the immediate response. And therefore, I think it stands to reason that businesses should think twice about sacrificing the effort that they've already made and the investments that they've already made in sustainability in order to react in some unsustainable way in the immediate term, knowing that they're going to have to go back to the sustainability later on at greater cost. So it's a bit of a looking beyond the immediate tomorrow type syndrome to where do we want to be at the end of 6 months.
In essence, pretty much tiding the wave, despite the fact that in the immediate onset, it might look like it's going to be of a higher cost. You might need to bite the bullet a little bit more. But if you're looking at not only the viability of your business, but the viability of your whole supply chain, we need to be thinking 2 steps, 3 steps ahead, because a lot of the policies that we're making, a lot of the decisions that we're making today is not going to be having an impact immediately, but it's probably going to make a greater impact in the long run of 5, 10, 15 years. Elliott, we've got only 4 more minutes. I'm enjoying this conversation, but I wanted to ask you before we round off, what about the role of disruptive technology, especially in this space where after, well, hopefully we come out better post-COVID, we're going to be looking at least a change in the way we behave with our supply chains. We've already seen things where businesses that are in the teleconsult industry, online learning, of course, things like biomonitoring, different types of businesses and industries are mushrooming as a result of the current pandemic because it is an opportunity for them. But it also means that businesses that are more in the traditional industries are going to be caught with their feet, well, I suppose not as competitive if you're looking at how fast you're going to be able to pivot to be able to manage new technology, new ways of doing things. So if we're talking about big companies, they may have still the resources to be able to expand or to ride some of these headwinds. But if you're looking at smaller, medium-sized organizations or smaller companies, which make the bulk of, for example, the Malaysian economy, how can they be agile enough and maintain that sense of readiness so that once we're ready to kick in again, we're not going to be caught off guard to say that we're no longer competitive because we're not doing things in the way the new norm needs us to be?
Well, I think that is a challenge that any business would face, regardless of its size or where it might be. It's a challenge that's harder for the smaller companies, of course, because as you say, they have less resources to do the investments needed. Perhaps there is scope for public programs that first raise awareness so that they understand, well, these are the shifts that we see happening in technology, in the way technology is deployed. And these are the ways in which these technological changes are affecting our core markets. So that analytical awareness of what is at stake, many companies are so busy managing the day-to-day that they don't have time to look ahead, to step back, to see what the bigger picture is, and they may not have access to the information needed. That is something that a public program can certainly do. I would certainly think that for those companies that provide finance for small and medium-scale enterprises, there would be an interest in making sure that these clients of theirs are as aware of what is happening and how this might affect their business going forward, and that they might be able to provide some support for what I might call as a sort of a capacity building effort. Yeah. So as companies, small companies, recognize what is happening in global markets and what is happening in their own markets, as they realize how technology is changing the way in which their competitors are operating, the bigger companies are operating, and perhaps they are expected to operate, there will come a point in time where they're going to say, okay, well, we need to make certain investments in our own human capital, but also investments in the plant and machinery that we use, and bringing the technology into our operations. And for that, they will need finance. And I would hope then that their finance partners, the banks that they deal with, for example, realize that it is also in their interest to support these kinds of investments, so that the companies that they are financing are better positioned to take advantage of some of these technological change, or to react to the changes that the technology is imposing on their markets. Makes them more competitive over time going forward. Now, I think that is a major challenge that requires a certain amount of concerted and coordinated effort. It would be too much to expect one individual SME, a small or medium enterprise, to do all of this on their own. Some will be able to with far-sighted leadership, but many won't. And that's why the public program that sort of does a collective effort is helpful. And similarly on the finance side, I mean, it would be perhaps a very good thing for an individual bank to say, hey, I'm going to go out and support my clients and do this, because that creates a market for the future. But it might be something easier to do if a group of finance institutions were to get together and say, this is in the global interest, it's in the interest of our home market, and we're going to do it jointly. Those might be ways in which smaller companies could be equipped to deal with technological change, because that is always going to be a disadvantage for them vis-a-vis the larger companies that have the resources to pay for this kind of activity.
Thank you so much, Elliott, for that very rich discussion. And we close the session screeching into the hour. In fact, 1 minute past 9 a.m. here in Kuala Lumpur. It's been an amazing time. If I were to recap some of the key thoughts that you had shared with us today, first, you were talking about the importance of understanding that sustainability needs all of its components to be working together for it to be able to work. So you're not talking about just economic viability against the social protection and human needs. You're not only talking about long-term or short-term profits, but how this is going to impact not only yourself, but also your supply chain. So that degree of foresighted leadership is required when any kind of decision making is needed in this particular moment in time. And then, of course, you shared with us about the shock cycle and how savvy and good leadership requires us to be looking 2 steps ahead. What is recovery and rehabilitation and closing the loop going to look like for all of us? Not just focusing on the immediacy of retrenchment and making sure that the bottom line is met, or in fact, in our case, is dividend paid to the shareholders where possible. But of course, you balance this out in talking about the fact that this pandemic will affect all of us in different ways. And of course, the smaller ones among us, including countries and SMEs and micro entrepreneurs, may find it a little tougher. And this is where you rounded off saying that this is where we need to come together and work on, well, basically it was SDG 17, Partnership for the Goals. And how do we look at assisting each other so that no one is left behind? You also touched about responsible consumption and how businesses can actually leverage on some of the key lessons learned during COVID so that we can actually plan better ahead, not only in a situation where businesses can thrive and sustain, but also have less impact on the environment. So that would be SDG 12. And you also talked about reducing inequalities. You're talking about the social protection system. How do we ensure that those that have lost their jobs and have lost their livelihoods have that opportunity to come back into the system one way or another, be it by assistance from a government or assistance from corporates and multinationals in the processes and the programs that they may have. So I know I'm going at bullet speed. I don't want to take too much of everyone's time, but thank you so much for the rich discussion. It was a pleasure having you, Elliott, and for sharing your thoughts. Thank you so much. Feroz, would you like to say a few things on behalf of the UNGC? You're on mute. Yeah, okay.
You're on mute.
Thank you, Elliott. Thank you, Nadiah, for this great webinar. Thank you for the attendees for your time a little bit early this morning as well. But I hope it was an enriching experience for you as it was for us here at Global Compact Malaysia. We also would like to welcome you to our future webinar series. Please stay tuned. We will keep you in the loop for that as well. Again, please join me in thanking both Mr. Elliott and Nadiah for such a great session. Thank you so much, and productive day ahead, and stay safe.
Thank you all very much. And Nadiah in particular, thank you very much for wonderful moderation.
Have a productive day ahead, everyone. Stay home and stay safe.
We will do. Thank you very much. Goodbye.
Bye.